Good morning to all. We'll start with our August monthly recommendations. First, we have Thermax. Current market price 4,059. First target 4,410. It's a mid-cap power company. They are mainly involved in manufacturing of boilers, chillers, heat exchangers related products. They gave a poor quarter one result. So if you look at the company for the past 2 years, if you look at their order book, their 2024 order book was around 10,000 crores. 2020 last year's order book was around 13,000 crores, around 30% increase in their order book. But if you look at their revenue has only moved by 3%. This is primarily because one of their business models, they have their core business model is mainly manufacturing of these products and selling of the products. Apart from that, they have a EPC business, engineering procurement business. Essentially, what it does is they will take long-term contracts from clients and they will do the same manufacturing and supplying, but the gestation period is much longer. So even though the order book has increased, this is the reason why revenue is not increasing. And most of these EPC orders are all from legacy orders, which means they are all from a much older period. So most of these power companies, they have been only doing well for the past 1.5 years. So right now, the new orders, their power is much better. So because of this old projects, lesser pricing power issues, their revenue has not really moved. So quarter one was bad because of these old delayed orders. They had also incurred around 180 crore loss, mainly because the order was not being executed. But now the management is hoping that for second half of the year, the company should do much better. They have taken a few debt also to fund all this. Apart from that, they're also starting a new model where they're selling energy on a per unit basis also. Otherwise, company is fundamentally strong. Their execution power also is very good. It's a company that among the power sectors, this is one company that faced a little bit of correction relatively. Next, we have Delhivery. Current market price is 473. First target is 520. So Delhivery, this is not, it's not a typical company that we recommend. This is a new age company. So Delhivery is mainly a logistics company. They're one of the largest logistics operators in the country. So what differentiates them from traditional logistics company like say Blue Dart is? So Blue Dart, they have a lot asset base. So if they need, for delivery, if they need flights, trucks, bus, whatever it is, they will have to buy the asset. So, but Delhivery's model is very different. They are asset light. They are mainly involved in leasing these assets rather than owning it, paying a huge upfront price. Apart from that, they are a new age company. What differentiates them really is their software integration. Because of this, and looking at their products, like they have mainly, which is the express parcel delivery, which is the basic products that every logistics company have. Apart from this, they have something called part truckload, which means normally if they have to take an assignment from say Amazon or Flipkart, instead of Flipkart renting out the whole truck, which was how it was before, Delhivery's option is they will take maybe orders from 5-6 different marketplaces and put it in one truck. So because of this, they can ask for more price, and even for the Amazon or Flipkart, for them also it's much better. So this stock has only been profitable for the past 2 years. That is why you will see the PE as little high, 198. PE is not really the right metric to look at this stock because they are just barely profitable since past 2 years. For companies like this, new age companies, what mainly market focuses on is their market share. Are they able to take a lot of market share so that over a period of time they will become profitable? That is what really market cares about. And today is the result. So for those who are looking to invest, please wait for the result, see how it is. We will update anyway on the group as well. So depending on the result, it's at a right. Last 2 quarters was also good. Last 2 years was actually good. So we're expecting result to be good. That is one of the reasons we gave this today. Next we have ICRA. Current market price 5,092. First target 5,500. ICRA is one of the rating agencies. In India, we only have 3 rating agencies: CARE, ICRA, and CRISIL. CRISIL is the market leader. CRISIL is the subsidiary of S&P, Standard & Poor, which is based out of US. ICRA is the subsidiary of Moody's. CARE is a completely Indian-based company. So this industry as such, it's very difficult to enter this industry. It's not easy for any firm to start their credit rating agency. Lot of regulatory hurdle is there. Even after that, growth is relatively stable for such an industry. Particularly CARE, we have recommended CARE many times before. CARE did very well. Right now, CARE's valuation is little high. That's why we're not given CARE. Relative to the 3, CRISIL is the market leader. ICRA and CARE revenue base is almost similar. ICRA has corrected very well. PE is right now around 24, which is decent. We don't see much downside from here. But one thing to note is if you look at the last year's results, revenue grew around 20%. When we see this number in hindsight, it might look very good that revenue grew 20%. But if you actually look at what happened, they had actually bought a company for around 300 and 400 crores. So the revenue 20% growth involves that company's revenue as well. So if you exclude that, the revenue only grew around 12%, which is decent for such a company. So that is one thing. Apart from that, credit rating agencies have in general corrected. Among all the three, it is ICRA that corrected the most. Next we have Aarti Drugs, current market price 416, first target 500. Aarti Drugs is a small cap pharma company. It's an API company, active pharma ingredient. We have recommended similar companies last 2-3 months and they have been doing well. Last month we have recommended Shilpa Medicare. Result was very good. Aarti Drugs also result came around 2 weeks back, but stock did not move much. But speaking about the company, again, they are mainly API focused. They also have a specialty chemical business also. They are a main export focused company. Around 42% of their revenue, more than 40% comes from abroad. Apart from this, if you look at their whole revenue base, 2024, only 60% of their revenue came from regulated markets. But if you look at it right now, more than 70% is from regulated markets. So the advantage of them able to sell more in regulated market is that they can price better. Because in unregulated market, it is easier to sell cheap products. In regulated market, getting approval itself is very tough. Apart from this, they have just completed a big capex cycle. Around 600 crores they have spent over the past few years in 2 plants based out of Gujarat. One is one salicylic plant and another is an amines plant. So the advantage of completing this capex is that for the ingredients they need to produce their product, they need not look at China. 60% is in-house backward integrated. So this will obviously improve the margin. So we are expecting them to do very well over the next 2 years. And this is one of our conviction ideas of last month as well. Finally, we have Rolex Rings. First current market price 156. First target is 175. So they are an auto ancillary company, very small cap company. Relatively auto ancillary to auto and auto ancillary. Past 2 months they have been doing very well. But this company, they have not really moved much because past 2 years their performance was very bad. They are mainly into bearings. They manufacture and sell bearings. Apart from that, they also have a train drive car segment also where they give other parts. So they are also again very export oriented company. So 2024 was mainly weak because the European market was very bad. European auto market in 2024 was very bad. Then again, hoping that 25 would be little better. Last year again, once this tariff issue came, it had impacted their orders very badly. Clients paused the orders. So because of that, revenue inflow was very less. But at least what we are coming to know right now is the orders were only paused. It was not cancelled. So it should again start recovering. Anyway, the quarter 1 result was very good. And the company recently announced a buyback also of around 180 crores. I think it was 2 months back. So whenever company announces a buyback, it is always a positive sign for us. Company will only buy back their shares only if in the future there is expectation that they will do well. Otherwise, they will try to push it on, sell it off or push it off to others. If they are buying back their own shares, obviously the sentiment is at least positive. Coming to last months, most of our stocks did well. ICICI Bank almost same. The ICICI Bank gave one of the best results. Yesterday SBI Bank also came. Result was very good. I think these 2 banks gave one of their best results. Balaji Amines is the only stock that did bad. No particular news, just broad-based correction. Their result was pretty good. It went up after that, but I think last 1 month, last 2 weeks, it was particularly very bad. Shilpa Medicare, after result came, the stock hit 15%. It has achieved target. Raymond result was actually yesterday after closing. So Raymond also gave good result. So those who have Raymond can still hold on. The result was good. And Grindwell Norton also after this stock went up almost 20%, but that was not really due to result. Result was very good, but one day we saw a huge spike in volume. That is the reason that Grindwell Norton achieved the target. Result was good. Again, result was also good. So we gave a return of 2.76%. Nifty still gave a return of 2%. Okay, thank you.